Better System Trader, episode 43.
Welcome to Better System Trader, the podcast to help systematic traders of all levels improve their trading. We'll give you loads of expert tips and practical advice on system design and validation, money management, trading psychology, and many other topics. Whether you're just starting out or a savvy systematic trader, we're here to help you improve your trading and find more success. This is Better System Trader with your host, Andrew Swanscott.
Welcome to the Better System Trader podcast. This is episode 43, and I'm your host, Andrew Swanscott. I'm so excited to be presenting this episode today because we'll be focusing on a trading strategy or trading style that's really quite popular, and it's also one that I'm a fan of personally, and that is breakout trading. We'll be talking with Tomas Nesnidal, who's been a full-time trader for over 11 years, specializing in automated algorithmic trading strategies. Now, Tom has experience with a number of trading styles, including option trading, spread trading, statistical arbitrage, and market internals. But in this episode, as I've already mentioned, we're going to discuss one of his other specialties, breakout trading. Now, in our chat, we're going to get super practical and discuss the key components of a breakout strategy and how to combine them to create profitable trading strategies. We'll also discuss the degradation of strategies over time and how to add new life into old strategies, and why creative thinking is such an important aspect of successful trading. Now, we also have some really special bonuses for this episode. I want to tell you about it now, but we do discuss it at the end of the show, so I'll leave the details for then, but I can tell you that it's really something you don't want to miss, so listen out for that at the end. Now, before we get into the chat with Thomas, a quick message from our sponsor. Did you know that traders just like you have been competing in World Cup Trading Championship events since 1983? There's no entry fee to compete, just fund your contest account with a minimum of $10,000 in the futures event or $5,000 in the Forex event and feel the excitement as you compete with traders from around the world. You can get more details on the show notes page, bettersystemtrader.com/43. Now on to the show. I hope you enjoy the chat with Tomas Nesnidal. Thanks a lot, Thomas, for joining us today. Can we please start with a little bit of background on yourself?
So first of all, thank you very much, Andrew, having me here. It's really a big honor for me being here at your great show. And some background about me. So I'm Czech. I was born in Czech Republic, which is a very tiny country in the center of Europe. And for the last 6 years, I have been living at south of Europe, in Spain, on the coast. Actually on the place which is called Costa del Sol, which means Coast of the Sun. And my original background is actually from movie industry. So I used to work like a film and TV director, and later on also like a writer and copywriter. And I ended in trading, which is something completely different. I'm also surprised where I ended, but that's life. Sometimes we have big turnarounds in life, and I became trader actually.
Okay, yeah, you're right. That is very different from trading. So how did you actually get started in trading?
Well, I think it's a kind of classical story because, I really enjoyed the movie industry. I liked moving. I liked making movies. But the movie industry is always very underfinanced, so I was kind of struggling like an artist financially. So one day I just thought myself that I need to do something, where can I make some good money and have some good high level of independence. And we also always wanted to travel a lot with my wife and live outside of Czech Republic on the coast. So I was looking for different opportunities, and I came to trading. And when I saw the possibilities of trading, I told myself, yeah, that it was, and I started with trading.
Okay, and so what style of trading did you initially start doing?
Oh, I started, through the years, because I've been in trading industry for over 10 years, and I've been trading live for over 10 years and full time for over 10 years. I went through, I would say, everything. So I used to trade, I used to do a lot of day trading. I used to trade options. I used to trade financial spreads. I even did some statistical arbitrage trading. So I went through all the style you can just imagine. And about 6 years ago, I decided I'll go for auto trading, for mechanical strategies, because it's probably the best trading direction for me and for the kind of life I always wanted to have. And it's very compatible with my goals and my perception of life, and also with the things I really like in trading, which is a lot of creativity, invention. So it just fit together perfectly.
Yeah, okay. And so what style of trading do you do now?
Right now, I'm 100% automated trader. I do only mechanical trading. Most of my direction right now are breakout strategies. I trade the strategies on future markets, actually on future markets only.
Yeah.
And I put a lot of emphasis on position sizing, the overall management of portfolio, and that's basically how I would describe myself. So it's 100% mechanical and a lot of emphasis on position sizing and portfolio, and mainly breakout strategies on future markets.
Yeah, okay. So what actually interested you in that style of trading?
That's a very good question. I think actually the reason why I got into automated trading, it's quite easy one. It's just, me and my wife, we travel a lot, and by today we traveled over 60 countries. So I was always looking for some good way of trading that I could do anywhere in the world, which isn't dependent on the time shift, because sometime when we were traveling I had to wake up some crazy hours and take care about my trading.
Yeah.
So that wasn't what I was imagining about or had been imagining about before. So I found out that automated trading can be really handled easily even when you're on the road. So you can be traveling in crazy places and still keep up with your trading. And when I started with automated trading, I was also looking for a certain direction where to go, where to take it from. And I was experimenting with a lot of different approaches. And basically, for some reason, I found out that for me, and this doesn't need to be necessary for everybody, but for me, the quickest way to come up with some viable, good, robust strategy, it was through breakout strategies. So I really got deep into this topic of breakout strategies, breakup concepts. And I was really digging into it and trying and experimenting anything crazy, any crazy ideas you can think about. And I really started enjoying this direction. And I think through the years, I became kind of specialist in breakout strategies, and it's one of my main directions at the moment, and I really enjoy this kind of automated trading.
Okay, well, as you mentioned, you have done a lot of work in breakout strategies, and you've published quite a bit of your research on your own website and on other blogs as well. So I'd just like to have a chat with you about that a little bit further. So you've already mentioned why you like breakout strategies, but what are some of the benefits of trading that particular style?
You know, it's a good question, because I've been thinking a lot why breakout strategies do work for me better than any other approach. And I think that it's a very universal concept. I think that if you look into the past, and if you read some books like what was that famous book of Market Wizards? Market Wizards.
Mm-hmm.
You see that a lot of good and great traders, they used to start with trend following strategies. And for me, breakout strategy, it's a just different variation of trend following strategy. So I think this conceptual direction is very strong. It's very universal. A lot of great traders made their career on trend following, which is kind of breakout strategy. Just the overall dynamics in markets have changed since the introduction of breakout strategies through turtle trading or through market wizards. And the change in market is really big. So we can't stick with the well-known trend following concepts anymore. And we need to come up with new approaches. We need to come up with something which has got some novelty and with something original, how to approach trend following. And for me, it's through breakout strategies. So breakout strategies, the biggest benefit of trading breakout strategies to me is that it's just another form of trend following strategy, which I think it's a conceptual direction very well proven through many and many years and many great traders.
Okay. Before I ask you about the components of a breakout strategy, I'd just like to get an understanding on what do you think makes a good breakout strategy?
Oh, that's a tough question. Actually, I personally never think of any strategy as a good or as a bad. I rather think in the way if the strategy does or does not passes through my robustness testing criteria. So in general, I would say that a good strategy is, or the components of good strategies can be anything as far as it passes all my robustness testing criteria. So I don't have like exact list of components that are better or worse than others, and I keep my development quite free in that. That means I try to be open to any components as far as they perform very well through my robustness strategy testing. But in general, I can say that good breakout strategy is usually, but it's not the case all the time, but it's usually very simple. It works very well on a variety of markets, and it performs well on many different walk forward analysis.
Okay. All right. Let's go a little bit deeper into how to create a breakout strategy by discussing, what goes into a strategy like that. So, what do you think are the main components of a breakout strategy?
What's the main component? I basically work personally with 4 components, which I will describe in a minute. Yep. But I think we could also just, raise the question what a breakout strategy is in deeper, in a deeper thinking. And when I think about this question, my answer always is that breakout strategy is just a certain point in a space, which if reached within a certain period of time, we can say that we are catching a certain wave or a certain movement or certain momentum.
Mm-hmm.
And when we catch this beginning of this wave, then we are trying to ride that wave. So for me, breakout strategy is in its basic components 2 things, and that is space and time, because you need some space. You need to, have some perception of space where you want to take on your position, and you also need to have some perception of time. And if you can figure out the space and time exactly, or let's say not exactly, but effectively, then you can come up with some good breakout strategy model. So for me, it's space and time, which I actually divided into 4 separate components. And those are something which I call point of initiation, distance, time filter, and then a regular filter.
Okay, great. So let's just take a few minutes to discuss each of these components, because I think it's important to have a good understanding of them. So the first one you mentioned was point of initiation. What do you mean by that?
This is very simple. You just need to start somewhere. So it's just some point from which you will calculate the distance. And this beginning point, it can be basically anything. It can be yesterday's close, it can be open of today, it can be highest, lowest value for the last 6 or 7 days. It can be even some kind of moving average. So it's just starting point. And then to this starting point, we need to add some distance. And then we have the level where we want the breakout or where we want to wait for the breakout if the price reaches the point and the breakout will occur.
Okay, sure. So, I mean, you mentioned a couple of examples there for points of initiation. How do you go about deciding what's a good point?
I go through a lot of testing and experimenting, and it's like I think that the craziest idea you can come up with, just go and test it. So,
Yep.
I'm quite fancy on crazy ideas because this is something I took from my movie experiences, like being really creative. So I can just go out with my pen and paper, and for a few days I can just think of different very crazy ideas
Mm.
what the point of initiation could be. It could be any kind of moving average, but it can be also some kind of adaptive moving average that we coded with my coder. It can be pivot point. It can be just anything. So it's very good always to sit down and think about any any idea you can come up with. And then I basically spent another week or two in front of the computer, and I'm testing all the components, all the ideas together. And the key part is the robustness testing. So I might have like, I don't know, 30, 40 candidates, which are different models, which operate with different point of initiation.
Mm.
And then out of that 40 candidates, there can be one or two which pass through my robustness testing, and later on I can add them into my portfolio.
Okay, so sounds like you've tested a lot of ideas for point of initiation. Have you found any to be better than others?
This is really this is really very interesting question. For some reason, I again and again realize that very often the simplest thing you can come up with works the best. So I have great strategies where the point of initiation is just yesterday's close. And it's very good point of initiation. Just
Mm.
yesterday's close can work, can make wonders in a lot of markets, not in all markets, but in a lot of markets. Then also it depends on market, because some markets are really tough. It's very challenging, for example, to build some breakout strategy on bonds or T-bonds or T-notes. So then you have to come up with some more advanced things, more advanced ideas, and then I can come up with something like adaptive moving averages or something like that. Sometimes I can even work with multiply time frames, and I can derive the point of initiation from completely different time frame. But again, it depends on the market, and in general, even very basic points of initiation can work very well on markets like indexes, for example.
Okay. All right. Thanks, Thomas. So that I think that covers point of initiation. So the next component was distance.
Okay.
So how do you determine what kind of distance you should use from the point of initiation?
Well, again, the distance, it's quite easy. I think it's almost the easiest part. And I again found out that very simple things usually work very well. So I like using multiply of average true range,
Yeah.
which is a very, very good technique to start with. Sometimes I use multiply of true range, which is even better because then you don't need to figure out the parameter for average true range, how many bars backs you need to use. So you can have even simpler models with that. But again, I like experimenting with a lot of different ways how to come up with different calculation of distance. So one of that could be, for example, that you can take two moving averages, and then you can use the difference between two moving averages as a value which you multiply by a certain number, and you have your distance. So again, creativity is the key here, but surprisingly, a lot of strategies do work very well with just very basic multiply of average true range.
Okay. But using an average true range or just a true range, or the other example you gave there of the difference between moving averages, they can really just give you a price level that has no reference at all to previous price action, like a previous day's high. So, have you found any success in using price action based entry levels?
This is definitely something what I'm also exploring. Price action can be used in more ways in breakout direction, in breakout trading. I personally like using price action more like filters. So I like using different patterns or price action significant points for filtering my trades.
Mm-hmm.
But you still can use price action for trying to discover new approaches how to calculate the distance. For example, you can take swings and you can calculate the difference between swings, and that can be another way how to come up with a new way to calculate distance.
Okay. So in the past, breakout strategies have been very popular, and they were quite basic, entering a specific distance from the open in the direction of the trend. The performance of those type of strategies seems to have degraded over time. Why do you think that's the case, and what do you think the solution is?
That's a very, very good question. I've been asking this question for years. And I think that you came up with a question that every trader should be thinking about a lot. And, I have two answers for this. The first one is, again, creativity. I really think that, you still can do pretty well with a lot of basic concepts as far as you can bring some novelty into them. So you need to constantly think, what new can I bring into this direction? What new can I bring into this concept? And I think that when you take breakout strategy and you try experimenting with all the crazy ideas, how to come up with new point of initiation, new calculation of the distance, new kind of filters, or even how to combine different time frames together, then you're opening a completely new universe of possibilities. And this universe is far away from the universe of breakout strategies you used to know before. And when you get really creative and you start really thinking about different ways, different calculation of the basic components, then I'm pretty sure and I can confirm that you can really come up with good, viable, robust strategies, breakout strategies. The second part of this, and this one I think is even more important, is that you really have to do a lot of very heavy, tough robustness testing. Because I know so many traders who like breakout strategies and they like the overall concepts, but they don't have enough discipline to go through very heavy robustness testing. So they might come up with some good idea, and then they, try different approaches how to test the robustness of this idea. And then, they got very quickly disappointed that most of those strategies are not coming through those tests of robustness, and they give up, or they take very weak strategy and start trading it live. And I think it requires a lot of discipline to be able to basically put into the trash bin 95% of your work because it simply doesn't passes through your robustness criteria testing.
Yeah. Okay. All right. Thanks, Thomas. So that covers distance. So the third and fourth components now are filters, different types of filters. The third component is time filters. So it sounds kind of obvious, I know, but can you explain a little bit about the time filter and how that's applied to breakout trading?
Okay. Basically, time filter is something that you can or you might not apply to your breakout strategy. It again depends on market. It's quite obvious that certain markets, they have certain kind of behavior in certain periods of day or even week or month. I like using and testing time filter just for the reason that I know already from my past experiences that certain periods of day can really improve your trading results if you allow your breakout strategy to enter or exit only during that time of period. But again, I don't necessarily use it for all markets, especially for swing strategies. When I try to build some breakout swing strategy, then I might avoid time filter at all. For day trading breakout strategies, I try to use time filter almost all the time because it can really improve your overall results.
So I guess a lot of markets these days are 24 hours, so they don't really have as much of a defined open as they used to. So how do you identify the start and end times for a session?
Yeah, this is a very good question and really not easy to answer. Basically, I usually work with time templates because it can get really messy, very complicated with these 24-hour sessions and with all that changes that has been done in markets regarding night sessions in last few years. So what I usually do, I have two ways how to handle this. The first way is that I use time template, which is based on regular pit trading hours, or I just simply have a look on the volume of the market, and based on that volume, based on seeing when the volume really starts, going up, and then when it really starts going down every day, I try to figure out what the best time template would be, and that's the time template I work with later on. And of course, it's with some markets, this is very easy, like with indexes. Any index already has got its daily trading session. So any listener who wants to trade breakout strategies, or at least start with this concept, if he starts with indexes, it's the easiest way to start with breakout model trading.
All right, thanks. So you've explained how time filters can be used to, I guess, identify optimal times for entries in some markets. But what about other market conditions? Can you use additional filters to improve performance there?
Mm-hmm. In fact, you have to use them because in theory, you can construct a breakout strategy just based on point of initiation and then some distance and time. But this kind of model has got a lot of disadvantages. One of them is that you usually have a lot of trades, but they have very low average trade. So in practice, as soon as you add some commission and slippage, then you're done. You can't use the model anymore. So you really need some regular filter. You need some filter that will help you, come up with higher average trade. You need some filter that can help you lower your drawdown, that can help you increase your profit factor, etc.
Mm-hmm.
So this is very important part of my breakout strategies, and I always use some filter basically in any trading breakout strategy that I have in my portfolio.
Okay, so I guess that's why it's the fourth component in a breakout strategy is the regular filter. Can you provide some examples on what you might use there?
Sure. So there is a huge variety of filters you can use. As I said previously, I can, for example, use some filters based purely on price action, but I also have filters based on volume or based on moving averages or even some other indicators like ADX or DMI. Basically, anything that works and passes my robustness criteria is okay. But just give you some example. So, for example, when you're entering long position with your breakout strategy, it's usually very good if that long position comes after some pullback in market. So then it's good to think about some simple way how to see or how to define if there's been or there had been pullback in the market before entering your breakout long position. And one of the easiest way can be, for example, that the previous day closed lower than opened. So this is very typical example of filter. If the day before was down a day, that means you close lower than open. That can be pretty good opportunity. Start looking for long positions on the following day. So basically, I use filters like this. Sometimes they are more complicated, sometimes they are easier, but I think this gives you some imagination what I'm working with.
Yeah, okay. So it sounds like a lot of those filters you're actually looking at higher time frames. Is that correct?
Yes, sometimes, not always, not always. I usually really like working with 2 time frames. Not all the time, but I just learned that if you use higher time frame, you really can get better filtering. So some of my strategies, they can look on daily time frame, or let's say on 60 minutes time frame, and this is the time frame which is used for the main filtering. And sometimes I can stay with the main time frame, which is usually 15 minutes or 30 minutes, and try some filter on this main time frame. And sometimes I can even combine both of them. And I think this additional time frame, or having a certain filter on both time frames, is another level which can really help you come up with good and robust breakout strategies.
So I guess with all types of strategies, there are optimal market conditions and other market conditions where those type of strategies don't perform too well. So what has your research found are the best or worst conditions for breakout strategies?
Oh, definitely choppy markets. That's the biggest enemy. That's the killer. So if you have choppy markets and you have some breakout strategies which don't have filters good enough to reflect that choppiness, then you can pretty easily get yourself into troubles. So it's definitely something I'm thinking about all the time, how to handle choppiness and how to come up with the filters that can help you get out of the choppy markets, because that can be very unfortunate. And of course, then the opposite is the true, and that means that high volatility works very well for breakout strategies. So if you have, high volatility or just normal medium volatility, that's already great, and you can have really very good trading. So I would say when there is high volatility in markets and people are scared, and people are normally scared, that's usually very good for me, because that brings some very nice profits. When there is no volatility, when we have choppy markets, that can be really challenging.
Okay, and what about changes in market conditions, for instance, moving from high or low volatility or a change in trend? How do you handle those differences?
That's also a very important question. In general, what I do, I reoptimize my strategies frequently, because I think and I believe that right now we're facing much, much quicker changes in market dynamics than we used to a few years ago. So I really believe that we need to keep adjusting on the changes in market dynamics. And from my experience and from my research, regular reoptimization is one of the way how to do that and how to stay alive with these changes. So that's why all of my strategies are regularly reoptimized.
Okay. Now it sounds like you're using intraday timeframes here to do these breakout strategies. So what time period have you found works best?
For me, for my trading, it's definitely between 15 to 60 minutes as a main time frame. And when I use secondary time frame, I like using 60 minutes, sometimes 120 or 180 minutes, or daily. Most of the time, the second time frame is daily, and the primary time frame is 15, 30, or 60 minutes.
Okay. Have you tried breakout strategies on the higher time frames like daily and weekly bars?
Yeah, I did. Actually, I done a lot of research on that. And, this time frame usually didn't work for me well for 2 reasons. The first reason is that the sample size, the number of trades was usually quite low. But the more important reason was that just daily or weekly timeframes didn't pass my robustness testing. So whenever I had good looking strategy on daily chart, it usually didn't pass my robustness testing and it wasn't viable at all.
Okay. So when you're taking these intraday breakout trades, what type of exit are you looking to take to get out of those trades?
Well, it depends if we're talking about day trading or swing trading. If we're talking about day trading, most of my strategies exit at the end of the day or just few minutes before at the end of the day. It can be 5 or 15 minutes before, or on the basic stop loss. So I'm using stop loss and end of the day as my exit. When I work with swing strategies, then again, I like working with many different approaches. So it can be profit target, it can be US dollars based profit target, it can be percent based profit target, it can be multiply of average true range based profit target. But sometimes I can even work with some, more advanced things like even applying a kind of trailing stop loss and working with more complex trade management strategies. But for day trading strategies, a lot of my research has shown that just simply exiting at the end of the day is simple but yet very powerful.
Thanks, Thomas. So some of the markets that you mentioned, you trade a lot of the index markets. They can sometimes be difficult to create models on the short side. So have you had any success in creating strategies that work on the short side? And
Oh, this is great point. you know, the indexes, they are so skewed that I don't even know if they're sometimes trading down because it's like it looks like they're just, especially in the last few years, it's just a lot of up movement and very little down movement. So you're very right. It's very challenging to come up with short side trading or short side logic breakout models on indexes. In general, I had some success, and you can do that. You can definitely find out a good viable breakout strategy that will trade both sides of indexes. That means long and short. But it definitely takes more time to come up or to find out some good viable breakout strategy on both sides in indexes. And then the ratio between long and short trades will always be higher for the long trades because it's nearly impossible to have balanced number of trades on both sides. So this is also one of the reasons why I usually advise to the beginner that it's easier to start with breakout models on indexes just on long side because you can come up with some viable strategy really quickly. And then when you get familiar with the concept and you try all the different things, then later on start developing strategies trading both sides because it definitely is more challenging.
okay, and when you develop these long short models, are they symmetrical, or have you found that you really need to adjust each for the type of strategy?
Yeah. Well, a few years ago, I preferred, having completely different strategy for long and short side because I wasn't able to come up with a symmetrical model. But through years, through experience, I came up with some ideas which work pretty well both ways within one code, one logic. So right now, nearly 100% of my strategies are symmetrical, and I prefer symmetrical logic, trading the same, components and same parameters for long and short.
Okay. Now, earlier you mentioned that you re-optimize your models. How do you determine the length or the frequency of the optimizations?
This is also a very important and interesting question. I've been experimenting a lot with this. I've been trying different approaches. I was trying different software. I was trying a lot of things. And for some reason, through the years, it always came to the point that the best period for regular optimization is between 6 and 12 months. So I used to be very precise in that. I had my reoptimization plan, and it was like after, I don't know, 243 days, on that day exactly, you need to reoptimize this system. And it's kind of stressful, because then with my lifestyle, when we travel a lot, it's like, oh, I need to do this, reoptimization tomorrow, and I don't even have internet here, because all my all my development is based on remote servers. But later on, I told myself, just relax and let's have a look. What happens if you are not that exact on that reoptimization period? And basically, I found out that, you just need to say to yourself that you're going to reoptimize each 6 or 9 or 12 months. And that's the period that you need to stick with. But if you'll do it 5 weeks earlier or 5 weeks later, it really doesn't matter. The impact is very small and it doesn't matter. So I actually do all my reoptimization work at the end of the year or at the beginning of the new year. And then I keep running my strategies with the latest parameter set during all the year.
Now, it sounds like you've got quite a few breakout strategies in your portfolio. So what are some ways that you can use these type of strategies to diversify?
Yeah, you're right. I have quite a few strategies. After all that years, I came up, let's say, with maybe 40, 50 viable strategies and with about 10,000 rubbish.
Well, that's not too bad. You got 40 or 50 out of that. So.
Okay. That was, just a very rough approximation. Maybe it was even worse. It's a tough business. But to answer your question, for me, portfolio and diversification, this is the real key part of my trading. So, you basically need to come up with a lot of different strategies, breakout strategies for a lot of different markets, a lot of time frames. And I'm always saying sky is the limit here. And then that's the portfolio, that's the diversification, which helps you to become successful trader and having more or less steady flow of income in your trading. So it's really the crucial, very important part, not to limit yourself just to one market or one time frame or one strategy, but to go as widely as you can just imagine, and sky is the limit here.
I imagine, though, if you're trading breakout strategies on the indexes, you could get quite a bit of correlation because, they all kind of move in the general direction at the same time. So how do you manage that?
Oh, yeah, definitely. The correlation on indexes is very high, and it can be also very dangerous because if you have too many breakout strategies in one market category, and then everything goes against you, then your risk exposure in that moment can be really very high, and it's not easy to handle that kind of situation. So you really need to diversify yourself in more market categories. For example, as I said already, indexes are quite easy to start with, but you can also pretty easily start with, let's say, energies or softs. So I found out that it's really not that difficult to develop a good breakout strategy on, let's say, soybeans, and then on, let's say, crude oil or natural gas. And then when you have one strategy on, let's say, M&A Dow Jones, the second one on soybeans, and the third one on natural gas, then you are quite well diversified already, and that problem of correlation doesn't bother you anymore. So you really need to come up with more markets, and this is the way how to handle the danger of correlation.
Okay. Have you done any research into other markets like currencies or Forex or the stock market?
I did not do any research on Forex. I did a lot of research on futures currencies, which is a very promising market as well. But right now, I'm not trading any strategies on this futures category yet, but it's on my to-do list. I've done some research on exchange traded funds, ETFs, and this is very promising, and that's also on my to-do list. So I would definitely like to incorporate ETFs in the future, as well as future currencies markets.
Okay. So for someone who wanted to get started building breakout strategies, what would you recommend they do?
Well, I think that the easiest way, they can come up to my blog. I don't know if I'm allowed to say the...
Yeah, sure.
Okay. So I think that the easiest way is probably if they come up to my blog, which is on my website, systemsontheroad.com, www.systemsontheroad.com, and there's a blog. And if they come to the blog, I have free breakout strategy example there. It's a 40 pages ebook with complete description of strategy, which I call BOSS, Breakout Super Simple. And it's very good point to take it from here, because this ebook explains the concept, it provides the code, and it's something to start with. And then I would definitely recommend start doing a lot of experimenting. So just trying to come up with different, point of initiations, different calculations of the distance, different filters. And then it's just practice. You need to do a lot of experimenting, robustness testing, and sooner or later you will start coming with different models, different breakout strategies for different markets and different time frames. And in a few months you can have small portfolio which can be already sufficient for making good living in automated trading.
Okay. Now you've mentioned robustness testing quite a few times today. So before I ask you about that a little bit more, just one or two more questions about breakout strategies. So what do you think is the most important aspect in creating breakout strategies?
Well, as I mentioned already a few times, I really think that it's creativity. It's you really need to force yourself coming up with ideas, testing them, and comparing. So it's like it sounds that it's easy work, because once the strategy is done, you just let it trade on your server or your computer, and you basically have a lot of free time. But this time, in my case, I always use it for coming up with new ideas. So it's very important to force yourself coming up with ideas, testing, comparing, thinking about different approaches. And then you really need to think in terms of portfolio, because one breakout strategy doesn't make you rich. In fact, one breakout strategy won't even provide stable living from trading for you. So you need to start thinking from the level of portfolio from the very beginning.
Yeah. And one final question on breakout strategies. So you mentioned that the four components which we went through. Which of those components do you think holds the most potential to impact performance?
I'm quite sure that it's definitely the point of initiation and the filter, because in many cases you can skip up time component completely. In terms of distance, you can do very well with multiply of average true range, but you really need to come up with different ideas of point of initiation and with filters. And it doesn't need to be complicated, okay? You can work with very basic stuff, but you need to test the right combination to see what is working on your market and what is not.
All right, thanks, Thomas. Now you've mentioned robustness testing a few times today. So, and you've already touched on a few techniques that you use to when you're creating strategies. But what methods do you use to determine if a strategy is robust?
Oh, and you do want me to stay here another hour?
How about at a high kind of level? Because I know that's a whole nother conversation.
Yeah, this is very, very, very. That would be definitely another hour conversation. So let me go to just very quickly through what I think is the most important. In my case, it's definitely massive walk forward analysis. So I do a lot of walk forward testing, Then I do a lot of verification on different time frames and different markets, because when you come up with some good viable strategy, you definitely need to see how it performs on different markets in the same market category, or even in other market categories. And this is very important, because every other market you test your model at, it's like completely different standalone auto sample testing size. So I really like, when I, for example, develop a trading breakout strategy for DJ, M&A Dow Jones, then it really has to work on EMD or TF or M&A S&P or even Nasdaq or DAX as well. So I can see that it's really robust, that it can handle other markets within the same category or even in different market category. Then, of course, I like using in-sample, out-of-sample testing. Then I always have 3 to 6 months of simulated trading. So I never start trading a strategy directly. It's, it needs to go through a certain period, which is 3 to 6 months of observation. Mm. And then I have some additional, more or less proprietary robustness testing procedures, which are based on comparing my breakout strategies to different levels of random entries and random exits. But this is more complex, and it's not that important as walk forward analysis, walk forward testing, and verification on multiply markets and multiply timeframes.
Okay. All right. Thanks for sharing that with us, Thomas. So I'd just like to start wrapping up today with some closing questions. So the first one is, what's the biggest lesson that you've learned through trading?
Okay, so first of all, I have learned that trading is, at least for me, it's really a very creative profession, and it needs to be treated that way if you want to succeed. So I think that most people think about trading like about technical profession, which, by the way, is also true. But I think that the key ingredient you need to add is the creativity. And if you combine high level of creativity with high level of technical abilities, then you can really become successful trader and get some really good competitive edge. And I always believe that that's the creativity and new ideas that you come up every day or every week or every month that helps you to stay in the game.
Yeah. Okay. What's the hardest part of trading?
I think it's staying disciplined when things go wrong, because it's, sometimes it's very challenging. So when you suffer drawdown, you need to keep very high level of discipline and keep your trading, having still, your optimism, which is not always easy in drawdowns. And then I think very important and difficult part is also to be able to decide when to switch off your system completely, because the performance of that systems is weak, and it's always very, very tough decision, because after all that time you put into developing strategy, you have some nostalgia and some connections, and it's not, for me, it's not always easy just to close my eyes and say I'm switching that off and that's it. So those are probably the hardest parts in trading for me.
Okay. What's the best trading advice you've ever received?
I think that probably the best advice is not even one single advice, it's a whole book of advices, and it's Van Tarp's book, which is called The Definite Guide to Position Sizing. And the message of this book is, don't focus on one strategy only, focus on the bigger picture. So I think that it's the bigger picture that you need to see, which means portfolio diversification and position sizing, because this is where the real opportunities are. And I can definitely recommend this book to any listener, because that's more advanced book, but it's very, very good in starting understanding what the bigger picture in trading is.
Okay. You've kind of touched on this a little bit already, but what do you think is the most important ingredients for someone to become a successful trader?
Again, I think it's creativity and I think it's psychology, because I believe that you really need to solve a lot of inner issues and insecurities in yourself before you want to be a successful trader, because trading is not always easy. You need to be able to stay disciplined in some tough moments, and it requires a lot of well-being, or a lot of state of good discipline psychology. So it's definitely psychology, and for me it's also creativity.
All right. And what's the best way for listeners to get in touch with you?
Oh, it's easy. Again, the listeners can come to my blog, systemsontheroad.com, and they will find some my posts there, my ebooks, and they can definitely contact me through this blog, systemsontheroad.com.
Okay, sure. All right, thanks. And one final question. Is there anything else that you'd like to cover before we wrap up for today?
Okay, so just in one sentence, work on your mental and creative part as much as you can, and take it like the very important, necessary part of your trading. Because I believe if you will put some energy into your mental and creative part, it will pay a lot. It will pay off a lot in the future.
Okay, excellent. Well, thank you very much for your time today, chatting about breakout strategies and the various components that go into that. So it was really great to hear the results of your research and all the knowledge you've gained out of that. So thank you very much for sharing, and I highly recommend everyone go to your website, systemsontheroad.com. Check out, you've got loads of great content there. And we want to thank you again and wish you all the best.
Andrew, thank you very, very much for having me here tonight. It's been big pleasure to have chat with you. And if listeners will find something helpful in this, then it will be great and it will really make me happy. So thank you very much again, and maybe talk to you later.
Yep, okay, and thank you. All the best. So much practical advice on breakout strategies, but it doesn't stop there. Now, before I tell you about the special bonuses for this episode, let's hear a quick message from our sponsors. This podcast episode is sponsored by the World Cup Trading Championships, considered by many to be the gold standard of real-time, real money competitive trading. We've been fortunate to have 5 former World Cup trading champions join us on previous podcast episodes, and they'll all tell you that the World Cup competition can be life-changing. Enter today to learn how your trading stacks up against your peers and how you hold up under competitive pressure. There's no thrill quite like seeing your name on the championship leaderboard throughout the year. And you might even make a few trading buddies along the way and take home a magnificent pewter or crystal Bull and Bear trophy. So why not make your futures or Forex account a World Cup Championship account? Visit the show notes page at bettersystemtrader.com/43 to learn more. Okay, now something else I just quickly wanted to mention before we get to the bonuses was something that really stood out to me when talking with Tomas today, and that was the part of creativity in trading. Creativity was something that Tomas kept coming back to throughout our chat, highlighting how important it was to come up with unique ideas to test. In fact, he actually said the key ingredient to trading is creativity, and that creativity helps you stay in the game, which is a very similar message to what we heard from Brett Steenbarger back in episode 25. Tom's advice? That was to constantly think about what new aspects we can bring into a trading concept to make it more unique. Try to add our own twist, come up with crazy ideas and test them. Now finally, let me mention the special bonuses we've put together for this episode, because Tom has been very generous in providing an exclusive bonus for Better System Trader. Now if you head to the show notes page at bettersystemtrader.com/43, you'll see we have a free breakout strategy toolkit there, and in the toolkit there are 3 things. Firstly, Tom's 39-page ebook on breakout trading, which includes the code for one breakout strategy in TradeStation Code. The second is a breakout strategy cheat sheet, which has all the ideas Tomas mentioned in the interview today, plus more, all in a handy one-page sheet. And the third one is the code for a second breakout strategy, which Tomas has created exclusively for Better System Trader, so you won't get it anywhere else. That's also in TradeStation Code. Now, as I mentioned, you can download that on the show notes page at bettersystemtrader.com/43. Or if you're on the email list, you'll get a direct download link for those in the email, so go check it out. Additionally, if you have any questions or comments for myself or Tomas, the place to post those is in the comments section of the show notes page, and we'll respond to you. So that's it for this episode. I really hope you enjoyed the chat with Tomas, and I look forward to joining you at the next one. Thanks for listening to Better System Trader.
Thanks for listening to the Better System Trader podcast. The next step is to head over to bettersystemtrader.com for more expert tips, practical advice, and exclusive content. Catch us next time for even more great ways to improve your trading here on Better System Trader.